Today I'm going to discuss the question, would Telenet be a good investment or not and why? I'm going to start with an introduction. To come to my conclusion, I'm going to analyze the solvency, financial independence, liquidity, profitability, stock price and dividend yield of the Telenet Group holding and its two biggest competitors, Orange and Proximus. After the analysis, I'll explain my conclusion. The Telenet Group holding listed on the Euronext Brussels on the 11th October in 2005. Telenet is a provider of telecommunication services. First of all, I calculated the solvency. It tells us something about the ability of the company to pay out its long-term debts. I divided the equity capital with the loan capital. The solvency of this company has increased a lot since 2015. Before 2015, they had a lot of debts. Now, they barely have any debt left, which is of course a very positive evolution. Looking at the company's two competitors, we can conclude that Telenet is in the best position based on the solvency. Orange and Proximus solvency hasn't been more than 1 since 2014, meaning they have a lot of debts and could have difficulties paying their long-term debts out. To have a better idea of the company's debts, I've calculated the financial independence of this company and its competitors. On this graph, we can see that Telenet's financial independence is about 99% in 2017, meaning they barely have any debts. They only rely on others for about 1% of their finances. In 2014, their financial independence was still only about 63%. Orange relies on others for its finances for about 60%, but their financial independence has been increasing every year. Proximus relies on others for about 88% of its finances, and their financial independence has almost remained the same since 2014. After the solvency, I took a look at the liquidity of the company. This tells us something about the ability to pay out its short-term debts. I calculate the asset ratio because this tells us how well the current assets of the company can cover the current liabilities. It's based on only the most liquid current assets. Since 2014, it has always been more than 1, which is positive, because the asset ratio of a company should be more than 1 to avoid risks. It means, for example, that the company doesn't rely too much on inventory. There is a decrease in 2017, but it does remain high. If we compare this to the asset ratio of Orange and Proximus, we can conclude that Telenet is again in the most secure position. Both of the competitors don't seem to manage an asset ratio of more than 1. To have an idea of the profitability of this company, I calculated the return on equity. This tells us whether this company is able to generate profits from its shareholders' investments or not. It's the net income in relation to the equity. In 2014, 2015, and 2017, this was 0 or less, meaning they didn't generate any profits from the investments, which is of course not positive for investors. But in these years they had loss instead of profit, probably because of the upcoming strong competitors. 2016 was a good year. It was then about 20%, which is very positive. Both Proximus and Orange have a much higher return on equity, but they also had a decrease in 2017, meaning there was an overall decrease in this sector. But while they had a decrease of about 10%, Telenet's was about 20%. Finally, I took a look at the stock price and dividend yield. The stock price is more than 40 euros, which is quite high compared to its competitors. The dividend yield is 0%, meaning you receive nothing for the money you invest in this company at the moment. Orange and Proximus stock prices are lower, about 14 and 22 euros. Furthermore, their dividend yields are both about 4%, meaning you'd receive about 4% of the stock price for your investment. Based on the solvency and liquidity of the company, Telenet is a good investment. They barely have any debts. Based on the return on equity, I'd say Telenet is not a good investment compared to its competitors. In 2017, they had a return on equity of 0%. Proximus and Orange also had a decrease in this year of about 10%, but Telenet's decrease was 20%. Furthermore, Telenet's stock price is higher, while the shareholders are not even able to generate cash out of their investment because the dividend yield is 0%. Based on this, it would again be better to invest in Proximus or Orange, because their stock prices are lower and they do have a dividend yield of about 4%. For this sector, I'd say Proximus and Orange are better companies to invest in than Telenet is.